When you've studied markets long enough, you learn one truth. Real alpha never comes from what everyone is already looking at. It comes from asymmetries. Today I'm going to show you the 3 biggest asymmetries in crypto right now, and why, in my view, Bittensor TAO and its subnets are still massively, almost embarrassingly undervalued. The first and most fundamental asymmetry is one of categorization. When a new technology emerges, the market's first instinct is to place it in a familiar box. For Bittensor, that box has been Crypto X AI. Most people still see TAO as just another token in this crowded narrative. This is a profound misreading of what's actually being built. Bittensor isn't an AI project in the traditional sense, where a single company builds a closed-source model. It's not creating one specific AI, it's creating a market for all AIs. Think of it as a new digital commodity market. It's the first protocol designed to turn raw, globally distributed resources, like compute power and specialized data, into a standardized, liquid, and tradable form of intelligence. It uses crypto rails not just for payments, but as a coordination mechanism to incentivize quality and verify performance at a global scale. No other project is attempting this. Yet, the market continues to value it with the same simple metrics it uses for GPU rendering networks or single-purpose AI agents. It's like trying to value an entire stock exchange by comparing it to a single company listed on it. This disconnect between its fundamental nature and its current market perception is enormous. It represents a classic category error, and historically, correcting these errors is where the most significant repricing events are born. The second major imbalance is a knowledge gap. To truly understand Bittensor, you have to go deep into its core mechanics, and grasping how the network actually functions isn't quick. It's a complex, multi-layered system designed to solve one of the hardest problems in technology: creating a global, decentralized market for intelligence. This isn't a surface-level investment. It demands a genuine commitment to understanding its architecture. You need to see precisely how its unique consensus mechanism, UMA, rewards real, verifiable performance, filtering out noise and identifying genuine contributions. It's not just about participation, it's about provable excellence. You have to trace why emissions, the lifeblood of the network, are intelligently directed to the subnets that create tangible economic value, starving unproductive models and nourishing the ones that serve real-world applications. And crucially, you must understand how validators and miners are financially aligned for the first time in decentralized AI, creating a powerful, self-reinforcing loop where everyone is incentivized to secure and improve the network. Very few have put in that time. Most people haven't done the homework. Even many of the loudest voices in the space still miss these key pieces, focusing on price action instead of the fundamental engine driving it. I'm not saying this to gatekeep, I'm saying it because that lack of widespread understanding is your edge. The moment the wider market finally connects these dots, this knowledge gap will close, and the price will adjust to reflect this deeper reality, usually very sharply. The third and final imbalance is one of capital access, and it's perhaps the most time-sensitive. For an asset of its size and importance, acquiring a significant position in TAO is surprisingly difficult. Right now, if you go to most exchanges, you'll find the order books are thin. Trying to buy with any real size means you'll immediately face significant slippage, pushing the price up against yourself. This friction acts as a natural barrier, keeping large-scale capital on the sidelines for now. And if buying the main token is hard, buying into the most promising individual subnets is even harder. The infrastructure to easily invest in these high-performing ecosystems is still in its infancy, accessible only to the most dedicated and technically savvy participants. This creates a major bottleneck, preventing capital from flowing to where the most exciting innovation is happening. But this is changing. The institutional pipes, the regulated custody solutions, the OTC desks, the prime brokerage services are only just opening. We're seeing the very first wave of specialized funds, like DSV, Stillcore, GTAO, and Void, starting to deploy real, meaningful capital into the ecosystem. They are the pioneers, building the financial plumbing that will allow much larger waves of investment to follow. Furthermore, critical on-chain infrastructure is right around the corner. New bridges to other ecosystems, liquid staking protocols that unlock staked capital, and index products that allow for diversified subnet exposure are all expected to come online in the next 3 to 6 months. Each of these is a catalyst that dramatically lowers the barrier to entry for new investors. So you have a situation where demand is set to accelerate dramatically. But what happens when that institutional demand hits a supply side that is incredibly constrained? In just 26 days, the network's emission rate is cut in half forever, drastically reducing the flow of new tokens. On top of that, a staggering 89% of the existing supply is already staked and illiquid, locked away by long-term believers. When the floodgates of demand finally open, there simply won't be enough tokens to go around. This is a textbook case of liquidity asymmetry, a predictable demand shock meeting a fixed, inelastic supply. And history teaches us that liquidity asymmetries of this magnitude don't resolve quietly or gradually. They resolve with sudden, explosive repricing events as the market violently searches for a new equilibrium. Put these three together. 1. Tech that's years ahead of the narrative. 2. Mechanics understood by 1% of the market. 3. A supply-demand setup that's about to flip. That's not speculation. Look, I'm not here to shill you a 100x crypto coin story. I'm here to tell you that TAO and the best subnets are still pricing in almost none of the value that's already live and shipping. The halving is 26 days away. The bridges are coming, the funds are deploying, the information is spreading. If you've done the work and you understand what's actually being built, then you know this is still early. Very, very early.